Hey guys, can you hear me now? Sorry, hopefully you can hear me now. Oh, okay. No, no sound still. Okay, I'm seeing a lot of a lot of. Okay. There we go. Sorry about that, guys. I was just saying that we're going to unveil that GEX trading terminal this Saturday and Sunday. So I'm very excited about it. You've seen me utilize it a little bit. I'll show you guys some more of it today. But if you want to be there for the actual formal unveiling of the GEX trading terminal, then you can join me on Saturday, Roger and I together on Saturday. And to sign up for that, I already threw the link in the chat, but I might as well do it again. And then we can take a look at what's going on in the markets. So looks like we got Mr. Calm, we've got Carlos, we got Alexander, James, Shen, Peter, Spider Monkey, Tim, Jason. Great to see you all. And let's see. Yeah, okay. So the SPY, we did post a all-time high today, and we did close near the high. So there's definitely bullishness. We're now officially out of that sideways trading box that I drew before. We definitely drifted higher, and it's not a huge rush upwards, but it is upwards movement, and now it's becomes fairly significant upwards movement. So if we look at that close today, just ignore the bottom of the bar, just where we closed today, down to the EMA 8, that is starting to become a significant distance. And then especially if we look at that EMA 20. Normally, when we deviate that far, look at the top of this bar, we start to pull back. We start to pull back. Okay, so it could happen quickly like this, or more likely it's going to be a controlled movement downwards, where over the next couple of days, 2-3 trading days, maybe 4 trading days, you see that when we deviate too much, we tend to pull back. Deviate too much, we tend to pull back. Deviate too much, we tend to pull back. And it doesn't have to be anything significant like this, just sort of to the EMA 8 right there. Here, beyond the EMA 20 to the triple witching VWAP over here, here to the EMA 20, here a little below the EMA 20, but we closed at the EMA 20. And so basically we're just saying, hey, 2, 3, 4 days, Friday, Monday, Tuesday, maybe Wednesday, we'll pull back towards that EMA 8, maybe the EMA 20, but at this point in time, I don't expect anything further than that. So a little bit of a pause here in the market would be in order. And if it happened, it wouldn't be a big deal. And that's why if you're in any of my services, I started to close out long positions, because especially if it's going to start pulling back over the weekend, I don't want to hit time decay plus a pullback and then hold through all of that and wait for it to bounce back up again. By the time it does that, a week or so could already have passed before we return to this same level. So if we look at this one, 1, 2, 3, 4, 5, 6, 7, 8, 9, that's almost 2 weeks before we got back to the same level. Here's 1, 2, 3, 4 days, trading days, we got to the same level, but we chopped sideways for a while and we didn't get continued movement upwards. This one, 1, 2, 3, 4, 5, 6, 7 before we recovered. Okay, so it can be a couple of weeks before. So if we start heading downwards, it could be a couple of weeks before we expect to hit that all-time high again and perhaps surpass it. So still kind of choppy movement, but it's a grind. It's a grind higher. It is moving higher. And when we take a look at gamma, we'll see if that gamma structure is still supporting a higher move upwards. Good afternoon, Tim. Good afternoon, Kirk. Okay, so let's take a look. I might as well get started at looking at that gamma. Actually, before we start looking at that gamma, let's take a look at the breadth. Okay, so we want to see if bullishness is coming into equal weighted SPY, equal weighted QQQ, IWM, small cap stocks, Dow Jones. We just want to take a look at how broad this bullishness is hitting. And then we'll take a look at a couple of the trades that we looked at before over the last couple of days. So let me take a look at RSP. RSP really moving upwards, making all-time high here, breaking up, breaking out. So that's good news for the SPY. So that is matching the SPY, that's supporting the SPY. So that's actually really good, really good. And then if we look at QQQ making all-time high as well. So far everything is looking very good. QQQE not as strong, but it did move higher and above the the MA 50. So that's positive news. So far, everything is looking good and fairly bullish. So this is a distinct change from the last few days, or especially the last couple of weeks. And then if we take a look at Dow Jones, all-time high, doing very, very well. That's looking great. And then IWM, same thing, trending higher. So let's take a quick look at ARKK, looking good. So we talked about this institution accumulation pattern that it's going through right now. So that's definitely heading towards a potential breakout right here. So everything is actually looking good. It's actually looking like we could go up for another significant bullish leg. Before we do that though, we are expecting that the SPY is probably going to pull back maybe to the EMA 8 only. But it could be the EMA 20. Let's take a look at Tesla, because when we looked at ARKK and we said that it holds a lot of Tesla, and Tesla was exhibiting a similar pattern. Oh, okay. So Tesla moved. It definitely moved today. So if you caught my commentary yesterday, then you're looking really good right now. So we've passed. Depending on how you like to draw your lines, you might have drawn it like this, and that's a breakout, or you might have drawn it like this, okay? In which case it's maybe a breakout, or kind of just barely a breakout, or just about to break out, depending on exactly how you drew a line. But in any case, this is looking really good, really solid. I personally took two call debit spreads, one a little bit more conservative, to October 17th expiration with I think it was 345, 350. So that's made a good amount of money today, and about a 50% profit potential out to October. And I also did out to November, I did a 355, 360, which paid me a max profit potential of about 120%. So that one's looking very good also, because we're already beyond 360. So I take my own advice. I trade off of my own advice, and Tesla is looking very good, very strong right here. Now again, is it going to be like this where it continues up and then pulls back? It's not going to go straight up, right? So it could consolidate or retest that EMA 8, or it could go up for a few days, then pull back and retest at that EMA 20, just like it did over here. But in any case, Tesla looks strong. It looks like it's doing really well. If this is a true breakout, then it'll go up and then retest the horizontal, okay? So that means like this, if it broke up, then it'll go up and then retest this horizontal or this horizontal right here. So we'll see. Well, we won't know for a couple of days, couple of trading days. But this is looking very good, very strong. Hi, Roger V. And if we take a look at, what was the other one? OKLO. Someone asked me about OKLO. I forget who it was yesterday, because I suggested that on Tuesday that OKLO looked very good. And then I suggested a option, and then yesterday that option was down 9-point-something% because we closed a little bit down, and someone asked, what do you think? And I made the initial mistake of saying, oh, maybe we'll adjust our trading plan. But then I was like, no, we have a trading plan in place. Let's stick to it. Let's take a look. And that trading plan was that we would target 79 by Friday. Well, today's Thursday, and the reason we did that was because with this Gamma software, the Gamma trading terminal, we saw that 80 Gamma pocket. So let me see. Let me pull that up for you. Okay, hello. We saw that 80 Gamma pocket, and I decided that it was a short-term target that there was a good chance that based on the expirations of the Gamma pocket that we could hit 80 by Friday. That's why we decided on a short-term 3-day trade. And you see that gamma pocket right there? That's what we were looking at. And sure enough, today we did reach and hit that gamma pocket. Now I decided not to target exactly 80. Instead, I decided to target 79 because I wasn't so sure about these wicks right here. I said, okay, well, let's do 79 just to be a little bit more conservative, a little bit more safe since it's just a 3-day trade. And so that level did get hit. And I just wanted to show you that trade right here. It's right here. If we held it to today's closed, well, it was up 82%. Of course, we closed at very close to 80. So I said, oh, I would hold it to 79. So not quite 80%, actually more like 70%. So I grabbed a screenshot of when we were close to 80. So over here, we're very close, I'm sorry, 79, very close to 79. That was valued at $7.45. And the entry on that was, oops, that's the wrong one. Entry on that was $4.40, just call it $4.45. So 745 divided by 445, okay, 67.4%, and that was just in 2 days. So gamma pocket, gamma helping with that analysis, making a nice gain in just 2 days right there. So hopefully, some of you were able to take advantage of that information and make some profits. So what are we looking at right now? Everything is looking fairly bullish, at least from the perspective of the price action on all the major indices. So let's take a look at our momentum levels and see if there's anything that's kind of overextended and overdone. So if we go over here, we'll take a look at our market performance, and everything is looking way better than it did a couple days ago. Remember, we had some concern about utilities. We had some concern about, I think it was industrials, and that mostly is gone. Consumer staples still looking kind of crappy. But this is looking fairly healthy. If I have 15 to 20 in between the 50-day and the 200-day, 15 to 20%, then I'm happy. This one's only 7%, but most of these are in that range, 15 to 20 range. And so these are all looking pretty good. Nothing super extreme, nothing at the 80s, nothing at the 90, well, 80 right here, but nothing at the 90s. This is a little high right here, utilities, high on that 200-day basis. So here there's a big difference there. So utilities, we could have some action. I think we started to look at utilities the other day and never completed it. So let me take a quick look at XLU. Okay, so looks like a bounce. Okay, so it looks like we may be resolving in the upward direction. So we would expect this 50-day moving average to keep on increasing closer to that 80 when they both get to extremes, 85 to 90%, 95%, then we would expect that to top out. So everything here is still looking fairly bullish. All right, so nothing, I don't have any major concerns about the current momentum in the markets. So back to the beginning. Basically, this is a tiny bit overextended. 2-3-day pullback to the EMA 8 would be appropriate for it to continue to move higher. That's not a guarantee. I'm just saying that that's where we are right now, because we could be on this day and then we get another day before we start pulling back. That is a little harder to determine at this point in time, but you can see that from this distance to there, that was a pretty big distance from the EMA 8 to the close as well. And then we got one more before we started pulling back. So right now, at this particular time, I don't know if this is it where we'll pull back, or maybe tomorrow we'll do another one before we start pulling back, or maybe Monday we do another one before we start pulling back. All I'm saying is that soon, within the next couple of days, it does seem like we should at least pull back towards that EMA 8. And I don't want to, and again, that lengthens the time between where we have to recover again and can move back upwards. So right now is not the best time to enter into long positions. It doesn't mean short the market either. It doesn't mean enter into shorts. Right now, the best thing to do is sit and wait for a couple of days for that little bit of a pullback. And sometimes that's what we do in the markets. Sometimes the best thing for us to do is not trade and sit on our hands for a couple of days. Okay. Yeah. Hi, Bob. Good to see you. And thank you, Tim. Thank you. So let's take a look. Even though I just said that, hey, let's not look at any shorts because we're still in a very strong uptrend. And let's not look at any longs really because we're waiting for a couple of days pullback, but we can prepare ourselves, right? We can say, hey, if we see a little bit of pullback to a certain level, then I want to start getting in on positions. So if we do that, we can take a look at our normal way of doing it is, hey, let's take a look at our sectors that are receiving a lot of attention. And we can see that boat made its way over here. So boat would be, yeah, that's in the 1, 2, and 3 month. It was in the 1 day yesterday, and now it's in the 1 week. So it is in a lot of these time frames. So that would have been one where we could have looked for some interesting opportunities. Today, though, what I thought I'd do is I would show you the GEX scanner. So if we go over here and we look at GEX scanner, if I'm running this scanner, what I'm looking for is places where it looks like the market maker is really going to help me make money inside my position. Now, if you don't have the market maker helping you, doesn't mean you can't make money. If I'm bullish on something and the market maker doesn't have any incentive to push the market higher, it doesn't mean that it's not going to go higher. But what I'm looking for is an instance where it looks like it's going to go higher and the market maker is in a lot of trouble if it goes higher. Therefore, they're going to start hedging themselves and they're going to push the market even higher. So I make it to my target even faster than if the market maker wasn't there for me. If I make money even faster, well, that's excellent for single options. So the faster we can move to a target, the more money that I make. I'll give you an example of that. So let's just say, I don't know, we were just looking at Tesla, so might as well take a quick look at Tesla and say, okay, if I choose this October 17th expiration and I go at the money and say, let's say we had a target of, well, actually, why don't I just actually bring up Tesla? Say Tesla. We'll see where the major gamma pocket on Tesla is, and we'll see if it's actually higher than where we are right now. So if we go over here, if we were trying to hit a target, look for a target, it might be right here. Basically areas of consolidation. So about 390 to 400 would be where I'd be setting that target. And then over here, looks like we've got 380. We got 390 or 400. Okay, so 380 and 400. So it looks like the market maker will help me if we can get beyond 370. That will help me on the way up to 380 and then 400. So let's just say I'm targeting that 380 and it happens, just say it happens in 2 weeks, okay? So that'll be September 26th. And it goes up 11.25 in that time. Then my 23.25 option becomes worth approximately 23.93. I made money, but nothing exciting, right? If I go 23, just call it 0.95 divided by 23.25, I've made 3%. It's not that exciting. But what if it happens tomorrow? What if it happens in just 1 day? And that's a 2 weeks difference. Okay, now look at it. Now theoretically it would move to 29.35. Okay, so if I do 29.35 divided by 23.25, now that's a 26% gain. That's a lot better than just 3%. So if the market maker is hedging and that pushes the underlying price to the gamma pocket even faster, well, then my single option is going to make money even faster than it would have without the market maker's help. So that's what this scan is looking for. The scan is looking for potential opportunities where the market maker is adding their firepower to the trade and potentially pushing us towards our target even faster than it would have otherwise. And the best measure of that is this rightmost column, percent volume to GEX. And the higher this number is, the more likely it is that the market maker is going to help push and drive those prices towards our target. So if I look at all of these, I do still need to say be judicious, because the market maker is only going to help if the price starts moving towards that gamma pocket on its own. The market maker doesn't initiate anything. It only reacts to everything. So if I look over here on ALB, and we're going to improve on these scans as time goes by and filter them out better, but we just want to make this available. And so we say, okay, it's at its MA200. It's at a lot of resistance right here. I don't know if it's going to go up. So it's got to go up on its own to trigger the market maker. If it goes down, the market maker is not going to get triggered. Like, I'm less at risk. Who cares? So they're not going to start adding their buying power to the movement of the stock. So if it moves higher, then the market maker is, oh, I'm at risk here. I better start doing something. And when they start doing something, that pushes the price even higher and even higher. So I need to have a reason to believe that it will at least initially move on its own without the market maker. And then the market maker can help us get even higher. So ALB isn't my favorite. And then Duke Energy, let's take a look. There we go. So we say Duke Energy, the little bounce off of middle of nowhere here. It's actually this support right here, this horizontal support right here. And then what we like about it is, what do we talk about in the post-market review? We always talk about the longer term trend as represented by the MA50. And then we see a reversion to the longer term trend in a shorter term trend. In our case, usually we're looking at the EMA8, which did a huge movement like this. And if we look in and zoom in, it does look like it started to move upwards. So let me just delete that and zoom in so you can see. Okay, you see that? That EMA8 curved upwards. It's hard to see because it's being blocked by that. Can I hide this? Hide. See, it curving upward, okay? So now the short term has reverted upwards to match the longer term trend. So let's say, I like this. I like Duke, okay? This is something I would trade even without knowing about the gamma pocket. But let's see if there's a reason for the market maker to add their buying power to the movement of Duke so that it might move up even faster and I can make even more money more quickly. So let's say, and we did get it in our scan, so there should be a nice gamma pocket here. It'd be, we'd have a problem with our scan if that wasn't the case. So we got a nice gamma pocket right there at 125. Looks like we got a little bit of one at 130, but look how big that 125 is. And if we get beyond the 125, look, there's almost nothing to the downside. This is very positively skewed. So that gives me even more confidence in that trade. Then if we get past 125, this 130 might start growing. And then we have a stair step up to 130, maybe up to 135, maybe up to 140. Right now, that's a little too far away. That's so small. There's not any real reason to have a strong faith in 140 at the moment. But 135, maybe. And then 130, yeah, if we get above here, this could start growing. So let's throw those levels on there. I say that my first stop was 130, right? 130. Oh, sorry, 125. Okay, and then 130. Okay, Okay, but look at how far 125 is. That's pretty lucrative right there. If I can catch now to 125, and of course over here, this is an area of resistance naturally right here. So why not catch the easy move to resistance? And then if and only if it breaks above that resistance, you pop in again and go after that 130 and maybe that 135. So this is looking like a great, I like it a lot. Actually, I like this quite a bit. And what we've got here is it shows that there's you would go bullish calls. There's currently no contract recommendation available. That will be fixed soon. We are making contract recommendations through this software, but at the moment, if it works better on if there's weeklies available. So there may not be weeklies available on Duke. Let me take a look at that. Yeah, so there's no weeklies on Duke. And that's why I didn't make a recommendation, because it's trying to find a shorter expiration to optimize the move. Just like on OKLO, we picked a really short expiration so that we could profit on that 3-day move optimally. And so over here, since we didn't get that recommendation, it's just saying bullish calls. Let's pick a bullish call. And there is a couple ways that we can do this, but one of my favorites, the easiest way to do it, and one of my more favorite ways to do it, is just how far away are we in terms of ATR? And we should be able to get that right here. ATR. Okay, 1.85 ATR away. Okay, 1.5 ATR away is roughly 14 calendar days, so roughly 2 weeks. So that we could expect that we might hit the 125 gamma pocket within 2 weeks. So if I expect it to hit within 2 weeks, I only have October 17th as my expiration. So that is definitely more time than I need. So I would pick something on October 17th. Okay, and since I'm not expecting to hold it to expiration, I'm expecting to hold it to maybe just for a couple weeks, just to the end of September. So I'm not going to bother with going in the money in this case. I'm going to go close to at the money, maybe slightly out of the money. So anywhere from 40-ish delta to 50, 60 delta. Okay, so this one jumps from 35 all the way to 63. I could pick either one of these. I'm going to pick the one that is more liquid. So bid-ask spread, $1.30, $1.65. That's 35 cents wide. That is nearly a quarter of the value of this option. So that's not particularly liquid. Here's 30 cents on a $4-ish. Okay, so that is far, far, far better. That's less than 10%. That's 7 point something percent. So this is far more liquid, much better. And so I could choose this one and say, hey, let's go in at the mid over here for about $4.25. So let me throw that onto option strat. And we can track another trade. $120 strike is correct. About $4.25, that's correct. So I'll go ahead and save this trade. This was today's post-market review. Okay. So I like that. I like that quite a bit. Now, what we could do is we can see if there's any support on gamma to find a stop loss level, but there's not. This is so little and everything's so heavily skewed to the upside. So then we just pick our own. We want to complete the plan. Remember, four stages to a plan. You have the trade idea, you have the timing, you have the execution, and you have the trade management. So the trade idea is based on the fact that Duke pulled back and is bouncing, that we have this short-term to long-term reversion match right here that we showed you a little bit earlier, And we have a gamma pocket at 125, and it is a significant gamma pocket. It is huge gamma pocket with some strong GEX right here, where that it's large enough that the market maker's hedging activity can be significant and can drive the price in our favor in that same direction. Well, now that's a solid trade idea. So check the box for number one. Timing. The timing is now. Why now? Not because of the gamma pocket, because the gamma pocket was probably there yesterday, it was probably there the day before also. It's probably still going to be there tomorrow and the day after and the day after and the day after. So the timing is now not because of the gamma pocket, but because of what? Because of our short-term reversion to the long term. So today, or maybe technically yesterday, was the time where that EMA 8 hide. Okay, so here yesterday I wouldn't have done it because it was down and then flat. And you might say, okay, it's tiny bit up. Well, that's not up enough for me to say that really reverted. Okay, so it's really just today where that clearly bent upwards to match the longer term trend, the MA50. So that is why the timing is today or tomorrow near the open. Okay, so or today near the close of today. So in the last 5 or 10 minutes or 30 minutes of the session today, this would have been a great trade. Tomorrow is not too late, so it's still a great looking trade. So that takes care of step number 2. So now we have the trade idea, we have the timing, and now we have the execution. And you just saw me go through and explain exactly why I chose the October 17th expiration and the 120 strike. So that's the execution. That's how I'm choosing to take advantage of the trade idea. I could have said, hey, I'm just going to buy shares. Great. I could have said, hey, I'm going to do a debit call vertical, a bull call spread. Great. I chose the 120 strike call, and that's my particular execution on this trade. So now we need to do step 4, which is the management, and the management completes the plan. So I already know I have my target. I am expecting it to happen in around 2 weeks. So that'll be the 7th, 6th. Okay, I'm expecting to happen by the 26th. I have all the way until October 17th expiration. So I could give myself a little bit extra. Why not? I could give myself an extra week. There's nothing wrong with that. Okay, out to October 3rd. Technically, I could even give it another week beyond that, but I don't want to be in the trade for a super long time. So I'll just leave it right there. And I'll say, well, one of these two, I kind of like a faster trade. So I'm going to pick Friday, September 26th. Okay, so I have a plan for if the trade does nothing. That's my plan for the trade. Oh, it just chops sideways. We're wrong about this bounce. It doesn't go up. All it does is it chops sideways, or maybe it goes a little bit, not all the way to 125. When we establish a stop loss, maybe it doesn't go all the way down to stop loss. It just kind of chops sideways for a while, all the way until Friday, September 26th. Then I'm done. I'm done with this trade. It didn't do what I expected to do. It didn't make it to my target in the time frame that I wanted it to. I'm done. At that point in time, I'll either have a less than expected gain or a less than expected loss because it didn't hit my stop loss and it didn't hit my target. Either way, doesn't matter. I close out the trade. So I have a plan for if it does nothing. I have a plan for if it does what I want it to do, which is go up. And that is anytime it gets near or to 125, I'm going to exit the trade. Anytime before February 26th, Friday, September 26th, if it reaches 125 or close to it, close enough to it, it could be 124.9, 124.75. I'm not going to hold it exactly to 125. Then I will close the trade. I will take my profits, and that completes. So I have a plan for it to go up, a plan for it to go sideways. Now I need a plan for it to go down What if it goes down? What if it doesn't chop sideways? It doesn't go the way I want it to go? At what point in time do I stop myself out? Well, we could say the MA50, that is right there. That's a nice tight stop right there. And I have to ask myself, is the market in a condition where a tight stop is appropriate? And you could argue, yeah, we're in a low volatility environment. VIX is still super low. Okay, VIX is still, I mean, sub 15. That is very low. So now if we go back to Duke, yeah, maybe it's appropriate. However, given the fact that we feel like that we're near a market top and that we're probably going to start pulling back in the next couple of days, then maybe we don't want such a tight stop. So maybe I'm okay with this triple witching VWAP, this dotted red line right here. You go, okay, that's pretty good. We got the EMA 8 in the way. We've got the MA 50 in the way. We got that triple witching VWAP in the way. Maybe that's a good price. But you know what? What for sure, this 120 level, that's a pretty good level. Okay. And if I do 120, that is $2.11 to the downside from this close. Okay. And then where's my target? My target is 2.89. 2.89 divided by 2.1. That is a 1.37 to 1 reward risk ratio. Okay, it's not my favorite. I would rather have at least a 1.5 reward to risk ratio. So let's try that VWAP, which is at 120.73. So I'll call that 120.75. 2.89 minus or divided by 120.79, that would be $1.32. And there we go. We have better than 2 to 1. Let me make sure I did that math right. Yep. Okay. 122.11 minus 120.79. Yeah. So that's better than a 2 to 1 reward risk ratio. So I'll go ahead and draw that in right there. And we want to enter basically at the same price where it closed, which was 122.11. Okay, we got our stop at 20.75, and I got my target at basically 125, but I'm not going to be nitpicky if it's a little bit lower than that. Okay, so this is a 2.13 to 1 reward risk ratio. That's my plan. We just completed all 4 steps. We have a plan for if it goes up, a plan if it goes sideways, a plan if it goes down, and we'll see. We'll see if it hits. Okay, or which one of the 3? It can't do anything other than those 3, right? It can either go up and hit our target, or it can go down and hit our stop, or it can chop around somewhere in between those 2 until Friday, September 26th. Those are the only 3 possible outcomes. I plan for every single outcome. I know exactly what I'm going to do, just like on OKLO. And right, we had a plan for if it went up, plan if it went down, plan if it went sideways. We got the exact same thing right here. And now we know exactly what to do. We never have to make any on-the-fly decisions. We don't have to panic if it goes down. We don't have to get too excited if it goes up or if it just chops sideways. It doesn't matter. We have our plan in place. And the gamma pockets helped us identify this opportunity, given that the market maker could help drive this towards that price very quickly, and it helped us determine that target price right there. Okay, so I've been talking for a while without pausing to look at what you guys are saying. So let me see what you guys are saying. What about 919, 120, 125 vertical? Okay, we could take a look at that. That is one way. That is a different expression of the execution. So 919 is just a week away, and you're doing 120, 125. So we can expect that roughly 100% gain potential on it. 122 is just under the midpoint of 122, 125. And so actually I would expect that we could get a little bit better than 100%. In other words, I expect to be able to get into this spread at a better than $2.50. And right now it's looking like potentially it's a bit wide. It's wide, but if I could get in near $2, that is very lucrative. That is going to create a high expectancy. Again, no guarantees that we're going to win, but the reward risk ratio on this, like if I could make 20 of these trades, 40 or 50 of these trades, then my expectation is that we're going to end up making a whole lot of money because of the way that this is priced. The closer we can get so I definitely wouldn't pay 260 because what did I say? I said we should be able to expect that we can get a little bit below $2.50. So what I would be doing right here is when the market opens, I would go ahead and put in a bid at $2. And hopefully it gets filled. It might not. And if it doesn't, then I'll bump it up $2.10. And if that doesn't get filled, $2.25. And if that doesn't get filled, $2.30. And I'm going to slowly work my way up. I do expect that we should be able to get in below $2.50. So I'd probably stop at around $2.40 or $2.35. Just slowly walk my way up towards that level. And hopefully you can get executed well below that level. And that would become a really, really lucrative trade. So I'm actually going to put this in, let's see, let's do this account, Gamma, because Gamma is what helped us identify this. Thank you for asking that question, Dan. This is looking pretty good. So I'm going to try at $2. Why not? And then, if it doesn't execute in the first 15 minutes of the market or first 30 minutes of the market tomorrow, then I can slowly walk my way up. It just depends. The exact time of how long I'm going to wait depends, because what if this starts moving towards 122.5? Well, then I should expect that I should pay $2.50, not $2. So if this starts moving up, then I'll move my bid up faster. If it starts moving down, then I'll stick at $2 for a little while. Can I show the gamma on 919 for, yeah, I can show that. Yeah, so there's right there, 125 gamma pocket. Okay, 130 is there too, but it is there on 125, at 125, and it is by far the largest GEX. So gamma does imply that it is possible for us to reach the 125 level by 919. It is possible, yes. Even though I said based on the ATR estimate, I estimate that it could take 2 weeks. But 2 weeks is without the market maker participating. So with the market maker participating, could we accelerate that and hit it by 919? Yeah, for sure. You can do this after the market is closed. I can do what after the market is closed, Jay? Sorry, I'm not clear. I put the order in after the market is closed, if that's what you mean, and hopefully it'll get executed tomorrow. But again, these are not, I can't recommend these. All I can say is that I like the setup, and I put an order in, and you have to decide for yourself if it's appropriate for you and your account. Okay, so I'm really excited about this software. So this was a complete soup to nuts idea. We used the GEX scanner to find the opportunity. We saw that there was a good trade idea other than just GEX. GEX just made it even juicier. Now, do you need that other trade idea other than just GEX? No, but your odds of getting a winning trade are much better if you have the outer context along with it. So if we just use just the GEX scanner, then sometimes we'll find things that maybe they pull back before they go up. Maybe they chop around for a really long time before they go up. So having that broader context increases the probability that we have something that can move right away. and it increases the probability that of overall profitable trade. So I do recommend you could just take the opportunities and just run with it, and you'll probably have a slightly better than 50% chance win rate. But why accept that? Why accept a 55% win rate if you could add in just a couple more things and bump it up to 70+%? I'd much rather do that. So we did that with Duke. We showed you the trade idea. We showed you the timing. We showed you the execution, 2 different executions actually. And then we showed you a trading plan for one of them. I might as well create a trading plan for the vertical spread, right? That's what we're missing right here. So let's see. Are you able to give us any indication how much it will cost to access GEX yearly? Or I have no idea, Bob. I actually have no clue. So I don't set prices. That's the publisher. So I have no idea, unfortunately. So, but maybe we'll have an idea by the time Saturday rolls around when Roger and I reveal. I don't know if we'll have pricing by then, but we might have pricing by then. The order, you can do that. Yeah, we put in the order aftermarket. Yes, we can do that. Yes. Okay. The call put ratio is 5-to-1. That's not surprising to me, given by how skewed we are in the GEX. Obviously, tons and tons and tons of positive gamma and very little negative gamma. So yeah, the call to put ratio would be largely skewed as well. If we own your Maverick tool, could we use Maverick as entry? Absolutely, absolutely. That's another way to use this. I guess we'll get to the trading plan for the vertical a little bit later. If we can absolutely do that. So if I go and I look for something on Maverick, let me find, oops, oh, what is going on? And we find something that we like on Maverick. Looks like a lot of insurance companies. That's interesting. Some financial companies. Let's just say Rockwell. Why not? Let's just take a stab at Rockwell, see if that looks good. Decent. It's a lot of chopping sideways, so not my favorite setup. Let's see if we can find something that is trending a little bit better. That is a little bit better. Okay, I'm surprised to see Caterpillar. Oh. I haven't looked at Caterpillar in a while. This is starting to look kind of good. But let's find one in a sector that we like, actually. So let's do... that's not... Okay. Maybe XME metals. See if we have any metals, if we have any. Let's pick one of the financials. Okay, so let's take a quick look at AFL. Okay, well, just say I like AFL. We broke above the MA 200, came back and retested it twice, and now it's on its way up. It's testing these highs again, and I think maybe it can break out. Okay, so this is probably too late for Maverick. Maverick would probably ask you to take profits very soon here because this is a pretty big bar. But let's just say, hey, is this an opportunity? Maybe Gamma is telling me a different picture and saying that it could go even higher, even though Maverick's exit is saying, hey, just take a small profit over here. So if I go over here and I say AFL, unrelated question, did you have experience with Trader as a broker? Yeah, I trade using Trader. That's one of the brokers I use. And AFL, there's a gamma pocket right there at 110, okay, which isn't actually. So in fact, what this is telling me is that Gamma is agreeing with Maverick that, hey, probably you should take profits pretty quickly here if you decide to take this signal, okay? Or, let's try another one, see if we can find one where maybe it won't be quite the same. All these are chopping sideways. Let's find a trending one. What? APD. No, ATO. This is the wrong. No, that's trending sideways. BLK, CAT, everything's trending sideways. This one's pretty good. Not my favorite, but pretty good. Actually, that moved a lot today. We need something that didn't move quite so much. And isn't chopping sideways. Okay, the Garmin is okay. My main beef with Garmin is that it's still inside this bar right here. So I'd like a lot better if it had broken out. But let's just do Garmin for the sake of this and say, okay, let's say I'm considering an entry into Garmin because Maverick told me that there's a good signal. Pretend I saw it earlier, so it's not near the top of this bar, not near right there. I have a feeling we might see a gamma pocket right here, and it's going to tell us the same thing. I exit very quickly. So let's see. But if there's another gamma pocket above it, then we could certainly target that other gamma pocket above it. Yeah, so we're right at a gamma pocket at 240. That's what I suspected. There is 250. So if we can get beyond the 240, then we can head towards 250. So what that tells me is that, yeah, Maverick gave me a good signal. If I had caught it earlier in the day, now that I'm looking at it after hours, there's not that much juice left into it. We're already at that gamma pocket. It's going to provide resistance. If we can get significantly above it and break above these highs, then yeah, we could go towards 250. Yeah, so that would say, hey, let's wait on this particular signal right here, because Maverick is likely to going to give a sell signal like this very, 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 very soon. So, which could be good if you had gotten in near the bottom of this bar. That'd be nice and lucrative. But if you're getting in at the top of this bar and then you're just going to get exited the very next day, the chances are you're not going to make a huge amount of money. I still make money, but not a huge amount of money. So you can definitely use it in conjunction with Maverick to say, hey, do I have room? Do I have room for this to run here? Okay, let's see what you guys are saying. I'm learning something. This is really, good, Jay, good. Am I trading options? Yeah, I just showed you an entire trade idea where we traded an option and also a vertical, or where the idea is to trade an option or a vertical. What was the strike price for Duke? That was, if you're talking about the single option, then that was over here. There's the October 17th expiration 120 strike call. Okay, again, I can't recommend. This is not part of a service. This is my public channel. So legally, I can't recommend anything to you. This is just a setup that I like. And if you trade it, you trade it at your own risk. Okay. 125 was the target for Duke. That's correct. I was just thinking using the two tools together could be incredibly powerful. Yes, it can absolutely be incredibly powerful. Yes. So if we take a look, I mean, at some point I'll find a really great example. Maybe Lennar. Let's take a look at LEN. But LEN. Okay, Lennar's looking very good. Broke above the MA200, went up, pulled back, but not all the way to the MA200. Pulled back to the EMA 20, and then moved even higher. And now it's pulling back to its EMA 8, and we got a maverick signal. This is looking very, very good. Okay, nice, beautiful uptrend up here, at least in the shorter term. It's that brought it above the MA200. So let's take a look at Lennar. What is the platform I'm showing? This is my Gamma software, the Gamma trading terminal, which we are going to showcase and tell you all about it and how you could get access to it on Saturday. Roger and I are going to do that, and I'll show you the link right there. I'll pop that into the chat again. So basically, we're just asking you for your email address and maybe your phone number so that we can notify you when we're doing that, and then you guys can really see me showcase the real power of this program, although you're getting a pretty good idea right now. Okay, so let's take a quick look at Lennar. Okay, Lennar, we've got a gamma pocket right there at 143, an even better gamma pocket at 145, and a nice step up right here to 150. If we can get past 145, 150 looks like it's super easy. And by the time we get there, these might start increasing. This is a gamma step or a gamma ladder all the way up to 200. So Lennar is looking like a super opportunity. And what this tells me is that, number one, we've got maverick signaling that it's really good and that the market makers are expecting a big move. They are also having to hedge themselves quite a bit if we start moving up towards 145. And so they will help that big move. And also, we don't have to necessarily stop at that first gamma pocket. So that gamma pocket is at 145, but we've got significant potential for it to keep on running up to 150 and perhaps even all the way to 200. So let me throw that up on there also. And then okay, 200 is pretty out there at the moment, but there were a few levels in between as well, right? So we don't have to just play this short term right here. We could play a longer term to 150. And if we were a long-term trader, like when we bought shares, then we can buy shares and see if we can hit that 200. There is earnings coming up right there though. So yeah, may want to wait for earnings. Okay, because the earnings, depending on what happens with earnings, it could completely change the gamma picture. Okay, so earnings are something that we want to be careful of. All right, guys, hopefully you're as excited about this as I am. This is stuff that I've been using for a while, but I've never been able to make it available to other people to use. It was all my own personal software. Now that we've got the team on board and programming this stuff, it's only going to get better. I have a lot more ideas on visualization and on ways to look at the data and easier ways to look at the data to really find the opportunities. So of course, if you get access to this software, any update is going to be absolutely free. It's going to be behind, like it's not like you have anything to install. This is just going to be through a web portal access. So I'm super, super excited about it. Updates will happen automatically. You won't have to do anything and it'll just be there and available for you. So hopefully you're seeing the power of this tool and how I use it to find really great opportunities. And hopefully you'll join me on Saturday while I reveal everything. Okay, thank you, Stephen. Thank you very much. RCL. Oh, that's great, Jay. That's great. Dan, RCL gamma on 919, positive on Maverick. That's good to know. RCL. Yeah. Oh, yeah, that's looking really good too. That's looking really good too. And then if we do RCL, you would do calls rather than verticals if pockets are increasing for the NAR. Yeah, if I want to do a longer term expiration, and then I would do a straight up call instead of verticals, especially if I wanted to capture that whole move, because my upside is going to be capped on the vertical, whereas the call can keep on making a lot of money. And RCL, yeah, RCL is looking great also. Great catch, Dan. That's excellent. Okay. All right, guys. Thanks so much. Hope you guys are super excited. I hope to see you on Saturday. Have a great rest of your day, and I will hopefully see you tomorrow as well. Okay. All right. Have a great evening, and we'll see you. We'll see you guys soon. All right. Bye, everyone.